Markets following RBI's decision. We invite Ajay Srivastava, CEO of Dimensions Corporate Finance Services, to take a few questions. Ajay, morning. What do we start with? The way the markets have been whipsawed and now firmly up post the budget. The slam dunk on Tuesday, now the RBI policy. Take us through your market construct at this level. What have you made of the action and how would you approach it?
I think it's been Rima, it's the best wake-up call investors could have had, because it was becoming so easy, the dartboard approach, buy what you want. And I think that one-day correction brought in a lot of reality to the market that things can happen. And when they happen with a vengeance. And which also tell you the Indian market is today sitting on a lot of leverage positions, because what happened that day was clearly leverage positions getting cut left, right, and center at market. So therefore, one should be cognizant that if one is investing at these rates, nothing wrong with, economy will continue. But what we came away, take out, I don't think the RBI Credit Policy Committee has understood the mandate of the people. The people's mandate was against inflation, really. It hurt everybody and the common man more and more. And what I heard today is that inflation is not going to come down as per RBI policy at 4.8%, but there is a move by external members to say rate cut. That's not good news. RBI needs to be really focused on inflation reduction. And if it doesn't happen, this long-term rallies do fizzle out in the end, because inflation raises an ugly head and the political realities will start to catch up. Therefore, I think we are at this level, most of us are invested well into the market. We don't think there's a need to take further position in this market. If you got cash, at least 20% cash, hold on to it. And just wait it out, because I can see very clearly our analysts are telling us the leverage positions are getting built up rapidly again. And that is what happened 3 days back, can happen anytime. So keep some cash handy. People who had cash on that date reaped a good dividend. If you didn't have cash or leverage and you were cut, you know what happened next morning. You were really very, very poor. So I would say, recommend very clearly is, I think, hold your positions today. Do not try to invest beyond 23,000 kind of indexes at this point of time. Let's wait for the budget. Let's see where it goes. Let the formation come through. There'll be enough time to invest. And FOMO is dead, as we all know.
And that's exactly what this market has been made of. FOMO, right? FOMO that's making people buy stocks at 80 times, 90 times and what have you. By the way, 11 o'clock is also the NDA meeting. I think it's taking place in the Parliament Hall, where all the allies are coming together and then they'll discuss sort of the next steps. And we'll get you more on that as we go along. But Ajay, hi, it's great to have you with us.
Thank you.
How do you navigate a market like this? You have a big event, you have a bit of a shakeout. It lasts for one day, and now you're talking virtual all-time highs again. And this happening when FIIs are still selling, and that's my only concern, and I want your perspective on this, because that's a massive wall of selling that is still hitting us on a daily basis. And yesterday, domestic institutions didn't absorb all the selling. So it's very clear that retail and HNI is also buying. I don't know, does it make you feel nervous? How do you look at this?
I think the best people were who were away on a holiday on the election day, if you ask me, result day. Those guys came out the best because they didn't have to take a call either ways. So, that's why I said in this market, one has to be careful, to cognizant of the fact that you got to take some money off the table. You got to be clearly invested in certain stocks. And over leveraging in this market is going to be a disaster, if you ask me. Definitely a disaster. So if you are out of the market and you want to now buy futures and options, I think that's not a smart idea to be. Doesn't matter. At the end of the day, the fundamentals count. At the end of the day, P's count. At the end of the day, realities come into play. And we cannot be not aware that now we have a government which has to respond to two key issues in the economy, which is inflation and income diversity. That has to be acknowledged, is thing on the table. And if we thought it's going to be business as usual, I think they'll be fairly disappointed in the next 12 months to see that the government has now, whether it is a positive or negative stock market, I don't know. But I know for sure is not going to be the business as last year, because two issues on the table: inflation, which RBI did not address today, it kept it at 4.8%, and income diversity, the divergence of income which is taking place is there. So you have to calibrate yourself. As I said, you have to now very clearly book some profits. You have to very clearly, and when you say FIs are selling, it makes prudent to sell into the market, which you yourself quoted, shares at 100 Ps, 200 Ps, 300 Ps. They may still go up. Nobody's arguing against the fact that it may not go up or the stock market. But the fact is, traditional wisdom, which is old age wisdom, which may not be applied today, says money in the bank is worth more than 2 in the stock market demat account.
I don't think many people have agreed with that theory, Ajay, and they're brave hearts, kudos to them. They like living on the edge, but I think it's been all about buying every dip, no matter if it is at all-time highs, and people are buying at all-time highs. The dip is 2-3%, right?
See, no, dip was not 2-3%. You saw what happened that day. The dip for 15%.
On Tuesday, yes. Yes, on Tuesday.
On Tuesday, 15% stock. So, that's what I said. If you bought in cash, you got cash on the sideline, you can stay through the market. But if you're on leverage positions, and leverage position margin, you can't replenish like instantly in 1 second, you can't replenish market. Your position gets cut by the broker. And that's where the danger lies, that what we have seen in the last 48 hours is built up of futures back to where it was. And the numbers are coming out very clearly, showing that in every stock, we're seeing future build-up taking place. A lot of expectations. And I keep saying one thing, that if you made money, use the money, enjoy the money. There is no point of making money, seeing it disappear, seeing it come back, and then sitting on a sleepless night saying, what's going to happen on the budget day? So comfort of exposure is very important. I think all of us are sitting on huge profits at this point of time. You can add on. Let's take the margin at 23,000. You buy a Nifty. What do you expect to get? Maybe 2%, 3%, maybe 5% at the end of the day, right? Is that worth the risk that you run today? Or you carefully nurture your positions, wait for what happens in the market, wait for a good correction, and then go in. Runaway trains have a problem most of the times, and to expect that the interest rates are going to come down. I don't think it's the unwarranted optimism in the market that we are in. Inflation demon has to be slayed. Savers have to be rewarded. RBI governor actually alluded to the saying, listen, get your deposit things in order, which is really telling the banks that you've taken people for granted by not offering rate of return, so they're taking the money to the stock market. You give a decent rate of return, money will come back from the stock market to you. And I think it was very clearly said in the speech today that RBI wants deposit rates to go up in the market. So when deposit rates go up, you can't expect interest rate for lending to go down and banks to compress time. That won't happen. I think the scenario is going to be interest rates are going to go up in the economy in the short term further. I don't think there'll be rate cuts, and you need to be, your positioning of the stock market portfolio should be clearly aligned to what the government is going to do, which is, I think, is going to be very clearly, a lot of it is going to be consumer focused. It's going to be GST rationalization, I think, is the key driver for this market. And I think we should wait and see whether the two-wheeler GST rationalization takes place, because that's a first trigger for textiles, garments, and is going to be two-wheelers. With that should tell the intention of the government.
So tell us how to construct a portfolio, right, at current levels. You spoke about GST rationalization, so that would put the spotlight in two-wheelers, textiles, etc. What else should one have in their portfolio right now? And where would you book profits?
I think it's going to be more and more defense at the end of the day, because that's the trigger is going to be, because our exchange rate under is not the best, healthiest exchange rate at this point of time. So defense remains a consistent theme. I don't think it's a thing. Capital goods, you can't switch off. It has to continue. When the plant starts to set up, it'll need the boiler, it'll need the system, it'll need the power. Power sector, I think, would be the biggest winner in this year, because that is where the major focus has to be. The demand supply is changing, the dynamics are changing, and at the end of the day, we need more capacity with this transmission. So I think power, capital goods, two sectors, defense, and these are old sectors, nothing new I'm saying, but these should continue to get priority. While I said two-wheelers, tractors, I think on the agriculture side, all the input companies are, I think, going to see a decent bonanza, because that's where the government would possibly focus, given the realities of the political situation at this point of time. So agri inputs companies, agri-related tractors, tillers, I think they're going to have a swell time at this point of time. And of course, the best part is India has so many restructuring stories, so many demerger. If you look at the largest groups, they are doing demergers and bringing in businesses, whether it's Reliance, Grasim, whichever it is. And I think those stories will give very good returns to the people at this point of time. So, nothing changes very much, but what changes is some new things may pop up post GST rationalization, post the government's new stance in the budget.
Okay. All right, Ajay, we will have to leave it on that note for today. Thank you very much. We are in very interesting times, and we look forward to more such conversations with you in the near future.
Good day.
Thanks for joining in. All right, we have to take a quick break. Let's